Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show, and we've got one of the sponsors, Meridian Mining, is on today. We've got Gilbert Clark on to talk about the news release that they put out today with some exciting numbers in it. Gilbert, thank you very much for joining us today.
Allan, thank you very much for having me back onto the podcast. It's actually a good meeting where I can sort of prattle on for more than 15, 20 minutes and give us sort of a more global update on what's happening at what we announced today in the markets.
With somebody who understands a little bit about this stuff.
Yeah,
30, I got 30 years of scars all over me from this business, Gilbert.
A lifetime.
Yeah, you're a second generation mining guy, aren't you?
Yeah, no, I come into I did another interview with my our chairman Bruce, and he instantly, Bruce McLeod, he instantly had a similar childhood to mine where we got dragged across the. I grew up as a toddler and was dragged across Australia. I spent my teen years visiting my brother in Cobar. So no, I've sort of
It's
seen
in
all the
your
missions.
it's in your blood. And you're
So,
and Bruce as well. He's a second or third generation mining guy, and I'm pretty sure for sure it's two.
yeah,
Yeah, and so you've been around rocks and stocks for your whole life.
basically, yeah. I actually cut my teeth in the Eastern Goldfields in Western Australia. Came across to Europe. And I was in the natural resource business there till I think it was 2007, and then I went into the capital markets as the private equity until 2020.
Oh, okay.
So yeah,
And
not so
then
much chip in the rock.
then you jumped across the street and got into even harder side of the business.
Yeah, the small cap market. So it's really with Meridian. It's been such an interesting journey because it's sort of mixing two aspects of the two great mining jurisdictions, Australia and Canada. Canada has very much focused on sort of reward for resource discovery, delineation, and there's always been a lot of exits at that stage. And usually it's good companies buying other companies much cheaper than what they'd have to pay for the say production or production premium, whereas the Australian market seems that they get much higher valuations because the Australian psyche is get in, build it, expand through cash flow. So we're sort of merging these two dynamics into one company and building hard assets. Of course, there's always opportunity for M&A, but at the end of the day, the Cabacal belt, subject to all the necessary studies, is going to go. I very strongly committed that it's going to go into production. There's no red flag.
Well, you did something that I find interesting in that you put out a report of the exploration target. And knowing the 43101 guidelines, I know that you're allowed to put out an exploration target. And I sometimes wonder why companies don't do that instead of maybe being in a rush to put out a resource when they could do it another way. But I also am quite aware that, some of these companies shouldn't do it. And you're in the boat of why you have a project that can and should be done. And why don't you talk to us about that exploration target that you put out?
Sure. So St. Helena is it's the next deposit in the ranking of risk and reward on the Cabacal belt, because it's all been delineated through the historical drilling, both surface, underground, ground control drilling when the project was in production. And then we've come across and we've also expanded upon that. So we had very low risk, which we did at Cabacal, start at the center, grow it up, And we've had, I think it's some 13,400 meters of surface historical and our own drilling. And then there's another 920 odd meters of underground grade control drilling at St. Helena. So this gave us a very good platform to do an exploration target on. And then we used in that target, we used the historical production recovery for both the copper, gold, silver, and zinc. And we then could extrapolate this is what we think is going to be the recoverable metal. And as the Cabacal belt is a typical copper, gold, silver dominant VMS belt with, as in this instance, some zinc in St. Helena. And then it has the later stage high-grade gold overprint. In consultation with our QP and our council, we came to the conclusion that gold is the dominant metal that drives the Cabacal belt and the Cabacal mine, the PEA. And so that we will report St. Helena in that same fashion, so we can work that into a gold equivalence. So we've published those numbers, and we could get them, it's a range, an exploration target. You can't be specific in these things, which, it varies from some between 3.2 to 7.3 million tons of what we think is very open pittable potential, and from a grade between 3 to 3.2 grams per ton gold equivalent. So that gives us, potential ounces in the ground. I think it's between 300 and 760,000 ounces of gold equivalent recoverable metal. This is the potential that we see. At the same time, when we discuss this, Allan, we can see that there's potential for us to re-evaluate the flow sheet and try and increase those recoveries. We've got we've done great work with SGS in Canada to do that work for us. We can think that we can, there's not only potential in the resource upside, I think we can actually increase the potential for the metallurgical recoveries, particularly in gold, because we see at Cabacal some 30%, about 30% of the gold of Cabacal comes out in the cyclone. And in this historical metallurgical recovery, they didn't use a gold circuit, the gravity circuit. It all came in flotation. So I think, we had a lot of data. And when you're investing your shareholders' capital, in a very short time of drilling, there's been an extended period between that on QA, QC of historical data, both, looking for the drill hole colors, reassaying some of the historical drill core to give us an accurate database. In a very short time, all of a sudden, there's 760,000 ounces of gold equivalent upside. But in an economic situation, it's not going to need to carry the capital expenditure of building a new mill, because in this belt scale development we're envisaging, 10 kilometres up the road there at Cabacal, there's in the current PEA, there's a 2.5 million ton mill that already paid off. So then all of a sudden,
well, you start to bring up some interesting points there. When I looked at that news release, as I often do with projects at this stage, is I pay attention to that cutoff grade, because the cutoff grade gives you an idea of the low cost potential. And I think your cutoff is only about 0.3 something cutoff. So that's a good indicator that, you're going to have low costs to produce the material. So then I start to ask myself, well, what are their inputs? Is this an arm waving cutoff, or is it based on some reality? And as you were talking about, it is certainly based on some reality. But then I look at the grade and, put that into the context of, a lot of open pit mines nowadays are mining 1/2 to 3/4 of a gram. So you come in at over 3 grams with that cutoff. That's very exciting. But then the other thing is that not far away, you're only going to have to ship that material a short distance, and it isn't burdened by the need to have its own processing facility. So all of those things combined is why I think this is a very important document that you put out today in the news.
Yeah, no, when you have these hub and spoke development projects, the next deposit down the road doesn't have to carry that heavy initial capital expenditure. And when, you know, this is great, we'll go through and we'll bring this up into I guess, as much indicated material as we can. I'd like to have no inferred at St. Clevis, and we'll draw it out. But this is only a third of the trend. The respective units extend another 2 kilometres to the east. So there's a possibility that this is actually going to be future drilling 2024. It's a robust geological upside to this project. So, and again, you know, we've seen this a lot of the times in the market, of arm waving. This is going to be economical. A lot of the times, small deposits like this just don't have the capacity to carry the capital expenditure. So this just line coming across as you can find another. We find another 5 million tonne deposit, or if we find another 10 or 15 million tonne deposit, none of those future value events, potential valuers in the portfolio, have to carry capex for a mill, because that's carried from the big deposit of Cabacal. It's a very unique. It's I guess for some of the retail and these hard asset companies, development companies, are out of flavour. But when you've got those ounces in the ground, they don't go away. Exploration dollars, speculation, those dollars they disappear if it doesn't work. But when you're drilling up hard assets, which we are doing in Cabacal, those assets stay there. They only grow until you go to production. So,
you know, and I think that, you know, in the Lassonde curve, it's called the development discount window. And I think that is a playing field that is not well enough understood, because, for one, there's not enough in this industry, in the copper or gold space, of companies that are in that development discount window. So if we get a new audience coming into the metal space, if they want a little less risk and exploration, guess where they have to look? In the development discount window. And when they do that, they find that there's not a lot of companies in that window. And so I look at it more as an opportunity than something to stay away from.
Yeah, look, the natural resource industry, we've seen some good movements in the gold price, and particularly in the copper price also. We commercialise a lot of our metals in the copper space through sale of copper concentrates, or future sale of copper concentrates. And the near-term pipeline for projects is pretty bare. And, you know, where is the entry point for where does an initiative party in Meridian think, where's my entry point? Well, you know, it's I should keep saying it, we just manage our assets very well. And I think the entry point now, if you're looking to get into this sector of the resource development equities, I can't think of a better time. Because if you look at, we just talked about prior to kicking off the podcast, you know, the events in Panama, I mean, there goes 1% plus of the world's copper gone. We've got the smelter coming online in Indonesia. Okay, that's a fair whack of concentrate. There just isn't, you know, we've talked about this many times, there just isn't the legislation available in the West to facilitate the building of mines. And we also announced in the press release that we have actually submitted the preliminary license for Cabacal for 4.5 million tonnes. Now, 4.5 million tonnes is a pretty big mine. We'll start at 2.5 when we'll grow to 4.5. But that is a big mine. And then you say, okay, how are we going to feed this going forward? Well, Cabacal is a great resource. It will go for a long time. We've now got Saint Helena, now upwards of 7. Is it going to be above that? We'll see in time. But it's also part of a 3-kilometre trend, a very prospective unit. So I'm really interested. You know, there's a few development companies, exploration companies out there. But when I keep saying about it, our upside is low cost open pit dirt adjacent to the existing what we think will be the future existing plant.
And that plays into what I think about companies when they're on the right side of the Lassonde curve. I'm always looking for low-cost producers with high-grade production because it creates a lot of free cash flow and puts them into a position to have a lot of success in the right side of the Lassonde curve. And again, there's just not enough of those. Oh, your mic's on mute there, Joe.
Sorry,
No worries.
noise from the team in the corridor. I was having we had a strategy session in London last week, and it was really interesting that our chairman Bruce, and I totally agree with it. Junior companies or small companies have got 3 strengths. One's their people, 2 is their cash on hand, and 3 is their project. And in all aspects, we've actually got that foundation for going forward. We're well financed. It's very interesting. I think there's
you got the people for exploration and production. Bruce has built and sold mines and found mines, and you got that great team in Brazil. So you really have all of those key foundations of growth looked after.
Yeah, boards are, we've really grown the board just on the ability of the board to finance and to manage these type of assets for the shareholders. And Meridian is the growth in the board competence over the last couple of months has been astronomical, kind of like what we intended to achieve. But I just want to sort of go back to what we're looking at today. With the exploration target. Yeah,
because, I'll tell you something else that really stood out to me about that news release is you look at you have a big target of 3 kilometers, and what you talk about in this news release is based on 1.3 kilometers. But then I look at your geophysics, and the 3 kilometers is contained right in a key anomaly, and that anomaly extends for over double what you've defined or what you talked about in the news release. And then there's a second one that is almost as big as what you talk about in where you've drilled to come up with this target. There might be even something down on the east and the south that looks interesting. So I don't think it's a lot of arm waving to think that this is going to get bigger.
On the anomaly that's just to the north of St. Helena, what we'll do there is it's actually under a pretty thick, I guess, a colluvial horizon of sandstone falling down. I think we'll leave that one. I think we'll leave drilling that for a while because putting rods through that is going to be almost impossible. But
you got a 2 kilometer runway.
Yeah, upside. I was actually there and yesterday morning on that trend, and I'm going to be back there tomorrow morning. I'll do a couple of short videos and I'll post them on YouTube. We're actually running the geophysics out there at the moment, so it's going to be quite interesting for us. The surface EM loop. I was actually there yesterday, and I'll do a couple of videos tomorrow morning and put them onto the, like I said, put it out so people can see there's actually quite a lot of activity on that upside. But you've got to have targets. We've got the IP anomaly. Now we want to get some good hard low risk targets and put the holes in. But when just on the exploration target, I think, there's a couple of analysts rang me up this morning, and they're quite interesting about it, because what in our financial model for the Cabacal deposit, the front end is very, I think the first year we do over 200,000 ounces, and we're like increasing the throughput to 4.5 million tonne. I think the life of mine projection is well over 100,000 ounces gold equivalent. But what we have here is like 760,000 ounces. We're going to be able to put those that relatively higher grade material through the plant.
We have mixed it.
Yeah, so we'll extend the high grade feed to the plant further into the financial model. And it did took me by, I will admit, it did take me by a small surprise when we started generating the exploration target numbers, and it's sort of created a bit of a rethink on the rollout. And we'll come through and we don't take decisions lightly. We've got to make sure that we know what we're doing and planning it correctly. We've always made sure that at the project and business in general, we think through our decisions so we make the correct decision for the long term. But it really is when you have, potentially up to 7.5 million tonnes. 7.2 million tonnes, 760 ounces of gold equivalent in revenue, potential mine gate revenue. And you got to remember there's a component in there that's got some zinc, and the zinc guys tend to be a bit cheeky in their payables, so that will drop down the revenue, the net revenue back in an evaluation. But it makes it interesting for us to think, okay, we could have an extension of that high grade feed longer than we first conceived by batching. I don't think we'll blend this, but we'll definitely batch this through the plant at Cabacal.
And you've got a PEA there that suggests that it doesn't need to be enhanced. So being able to enhance it has got to be very exciting for the guys crunching the numbers.
Yeah, I sometimes I ponder the rollout of Cabacal, and you think, gosh, what is going to be the actual financial result of this project after 20 years? We know we've got to structure the future feasibility study to achieve the correct project financing. But when I look back at some of the other great VMS camps, they sort of built it, and then they went on for decades and decades and decades. So the financial model is quite interesting when you think of that sort of context of how VMS camps grow and how they continue, and how much because VMS, it's not like a porphyry, it's not a deep, Cabacal's instance, it's not a deep, our main ore body is not 1,000 meters down. So the capex gives us the ability for a small cap company to actually be able to build and finance these things.
Yeah, exactly.
And I can throw a dozen companies out there that are very good people, very interesting projects. They're not going to work. And it's, unfortunately, they try and make them work. And we've seen a number of instances over the last couple of years across the world where companies have, unfortunately, they've gone downhill, and there was zero in equity value at the end of it for the shareholders. But what we try and do is just keep growing the hard asset value, and eventually the equity.
What you're describing there reminds me a lot of when I got into the business in the early 1990s. A lot of big companies were built from having smaller projects that just kept on going and going and going, and then they were able to build on that growth. And you have a project here that kind of is perfect for a junior to try to go down that road, in that you have a very low capex. It's not one of these projects that nowadays everything starts at $1 billion. I think it's under $200 million to bring it into production. And you've got less than a year of production to pay your capex off. And so you kind of have a perfect situation to use that old method of growing a mining company with Cabacal as the start and Santa Elena following close behind that, and then exploring the rest of your belt? You're on mute again, Gilbert.
Sorry about that. It's when the company like Meridian, we are a resource development company. We have a purchase agreement. We are going down this road of development production with tremendous exploration upside and resource development upside, because that's the basis of the purchase agreement. Of course, we're a publicly traded company. There's always the opportunity for M&A. But if it does go down the road of becoming a producing company, then Meridian very quickly changes from being prey to predator. We will have probably one of in the space of low cost operating costs, low cost capex. We will have a very nicely cash generating business, strong equities. I think we've got a great shareholder base now. A lot of our shareholders, like I spoke to a lot of them today, happy, understand the markets are still challenging, but I think there's tremendous growth coming in 2024. And a lot of our shareholders just aren't in it for the day trade. They are in it because they see this as getting into that the nascence of the next mid-tier copper and gold producer. It's an exciting time for us. It's a frustrating time. Okay, it's a frustrating time for our shareholders. I know that. I get the daily reminder. But again, we're just got to focus on the long term here. And I can't control the market.
No,
but I can certainly control and influence the execution of the project to continue to develop and deliver these things that a typical small junior just dream about.
and that's what I really try to focus on, Gilbert, is what is the company doing to grow? And sooner or later, the market will look after things on that end. But if you stay focused on your end, which is doing things to grow the company, that's all you can really control. But as I was talking about that old method of growth, it reminded me of a Vancouver-based company that is Teck. And Teck started out that way. I don't think there's enough Techs in the world these days. And because I'm a Vancouver boy, Teck was always a company that I really admired a lot growing up in the business. And, I'm sure Bruce can say the same thing because he's from the north of British Columbia, but spent a lot of time in Vancouver. And I just look at the company's assets and the preliminary economic assessment, and I say, man, this company can grow into a significant sized mining company because of that low capex. If a junior has a $2 billion capex, how are they ever going to try to follow that road? They can't. When you have a couple $100 million that you can pay off in 7 or 8 months worth of production, and then you've got a free cash flowing machine, that's the foundation of growing into a big, following that path of a young tech.
Look, I see even advanced feasibility studies, the numbers that they produce, be it copper, gold, or the latest balloon lithium, and they say, look, it's only going to cost us $1.x billion to build this. You think, okay, it's $200 million market cap company, and their equity contribution to project finance, even if they were structured to, or did the preparation of the structure to achieve project financing, the equity just gets wiped out. And what we have to do is focus on what we can build, focus on what we can deliver, and that's what Meridian's doing. We focus on what we can do. We can deliver multi-generational assets. as we have in Cabacal. We're delivering on the community involvement to make sure that we get that social acceptance, which is very important in Brazil. At the same time, we have to expose ourselves to the international capital markets, and that's. I think the capital markets, international for resource stocks, there is a lot of capital sitting on the sidelines. Everyone wants to be able to say, oh, I picked the bottom. Nobody wants to say I missed the bottom. And nobody wants to say that I was a month early on picking the bottom market.
They don't want to be the chaser either.
And it's certainly do not want to be the chaser, because once you get momentum into the small cap market, which is overly due, the momentum becomes fantastic.
And I look at the capital markets from a big picture. And so let's say there is a big shift where some significant money comes into this sector. A certain amount's going to make it into the explorers, a certain amount's going to make it into the developers, a certain amount's going to make it into the miners. And if you look at the window in the developers, it's like you said, it's bare. There's just not enough of it. And then you kind of rate in the development discount window, well, a lot of those companies need that $1 to $5 billion to build a mine. If you look amongst your peers, there's just not a lot with a low capex, fast payback, and high IRR, which I think is what makes you special and a reason that you can look to the forward with some optimism.
Yeah, look, I'm not. The opportunity that we presented today was St. Helena with their exploration target, and then we combine that with the existing advanced nature of the Cabacal deposit, and then we look at the upside of the belt, and we have, I think, 6 other hydrothermal centres yet to test. And the exploration potential of this project won't be exhausted for decades. But certainly what we're doing now with that St. Helena deposit, the exploration target, the upside, is we're bringing to the market now the valuation that's not yet attributed to the exploration potential of the Cabacal belt. We're trading at, on the current PEA, I think we're trading at like 0.07 to NAV, which is ridiculous. So you have a lot of the capital markets players think we need to get 3 or 4 times our money. When you look at the NAV on this and where the entry point is, you can achieve that just by coming back up to normal metrics. But at the moment in the market, we've got financial metrics being calculated on sentiment rather than financial modelling. And that occurs. This is what the mining industry presents such opportunity for growth of wealth in equities. But again, you're right, Allan, when I look at the cupboard for development projects, there's not a lot in the pipeline. There's a lot of stalled projects. Most of them are stalled because of the unworkable attacks and legislation on the mining industry. And Brazil,
and most of them, Gilbert, all have $1 billion plus capex. There's not enough of them, and they all have $1 billion or more capex. You're at 1/5 of that on the low end.
I know there's some companies out there, Allan, their capex bill started off at some $3 billion, and now they're nudging $10 billion in capex. And you think, is it too? Sometimes you get these companies that are they make these projects just too big to fail, and there's a few of them out there at the moment. And then you look at the other aspect of that, where companies or investors can look at Meridian and say, well, that equity component is very small, and the risk associated with the project finance requirements for anything are there. So what I'm seeing is you've got the strong fundamental economics of open pit mining, low cost open pit mining, low simple metallurgy. in Cabacal, very low cost power. And then you're just saying this is just going to repeat itself along the belt, the exploration success. And we're just starting to taste that exploration success
with
now.
Santa Elena.
With Santa Elena. Yeah, it's an opportunity. We manage the project very tightly. After this trip, I've got to go off to Belo Horizonte to speak to the engineering firms. And I'm taking a young engineer with me. And he goes, look, I'm sorry, but I booked this very cheap hotel. And I said, that's the norm.
Well, getting back to the exploration at Santa Elena, before I let you go, Gilbert, you have a geophysical anomaly that's about 3 kilometers. And your target is based on 1.3 of that. And it's all contained within that geophysical anomaly. So I had my mentor in geophysics. He was at one time the world exploration manager for Anglo. And you always are trying to figure out a geophysical anomaly that works for what you're looking for. And you can see in the 1.3 kilometers that everything is contained within that geophysical anomaly. And then it extends for another 2 kilometers. Earlier, you mentioned that you are going in there with more geophysics. And I'm assuming that will give you better resolution so that you can then go in there and keep your costs down on your exploration dollars. But based on what I can see of where the anomaly is and where your target that you mentioned in the news release is contained, there's a lot of probability that you can extend that and keep it going for another 2 kilometers.
Yeah, with geophysical anomalies, I think there's been more geophysical anomalies tested than an American family goes through a McDonald's drive-through. People have tested these things again and again and again and again. The best way to
and
test
sometimes he's saying is sometimes the magic works, sometimes the magic doesn't.
The best way to test the geophysical anomaly is to actually have a deposit already there and just extend the deposit into the anomaly. And if the deposit is part of the anomaly, then it gives you a very good fundamental base to expand the zone of mineralization. And this is, we did this with Cabacal. We started with, I think, 600 meters of mineralization. We pushed that out to over 2 kilometers. We started at Santa Elena with, I think, 1,000 meters of historical resource, and then we defined the gold over peak by 1,300 meters. Then we extended that physics to the east by another 2 kilometers. But just like at Cabacal, and again, this is risk. And I know my shareholders are tired when I talk about risk, but any money manager in the natural resources sector, his fundamental concern is risk. That's all they worry about. That's what we always worry about. But we start with Santa Elena, which is 1,000 meters, 1,300 meters of a historical resource envelope. We've now got a target, an open pittable target in that, and we're going to extend it by drilling. We can extend the potential of that exploration target towards the east. And that's, again, it's the it'd be interesting to say, I think on Cabacal, our discovery cost was something like $3 an ounce. We hope to beat that at St. Helena, put out the resource statement next year.
Well, that reminds me of my mentor in geophysics who said sometimes the magic works and sometimes it doesn't. In this case, you've got the drilling and the target all contained within the geophysics anomaly. So the magic is working. It's being proven with the truth machine, the drilling, and it certainly looks like it will keep going in that direction. So I was going to say, here's to the magic continuing to keep working.
Thanks, Allan. Well, I guess we'll leave it there. We'll be in touch probably in the new year.
Anytime, Gilbert, I always like talking to you because you've got a good foundation in the sector in mining and exploration and the capital markets. So I think you bring a good element of knowledge for my audience so that they can understand what to look for. So thanks a lot for coming on.
Not a problem. If anyone's got any follow-up questions, just send it to info@meridianmining.co.net.br. Either email address works, and it comes straight to me, and I'll give you a response to your email inquiry. Okay.
Awesome.
Thanks, Allan.
I'm gonna close it off. If you have to run, I'll let you go. Gilbert, thanks a lot for joining us.
Thanks, Allan.
So there you go, folks. My original interest in Meridian was because of the economics that they show at the preliminary economic stage on their Cabacal deposit. And it really is exceptional in companies that are in the development stage, in that low capex, high grade, high margins, quick payback, high internal rate of return. In fact, it's probably in the top end of it's in the lowest end of the cost to bring it into production amongst its peers, but in the highest level of IRR. That's a heck of a combination to build upon. And the model is that they've got an entire belt. And so they start out with Cabacal. It is the one that handles all your capex to build a mine. And then they use that as the hub and go out beyond that, the spokes, to look for new stuff. And Santa Elena is a perfect example of the first of those going out beyond the hub. And so I think the company is very uniquely positioned in the development window of the Lassonde curve. And they have that element of the left side of the Lassonde curve with exploration. And I ultimately believe the company is going to grow to be a larger company of the future. As always, it's important for you to do your homework, speak with your financial advisors before making any investment decisions. Understand that Meridian is a sponsor of my work, but I have 30 years of experience in this business. And one thing that I've learned, whether it's a pick or a sponsor, I always stay focused on the filter that makes the companies interesting to me. And what I talk about is the news of what they're doing to build the company. I really like that Meridian is focused on building a company. They got the team, they got the project, and I think they got a bright future. So do that homework, and we'll talk to you soon.